Hello viewers, today in this video I am going to discuss about balance of payments. So first of all we should know the concept of balance of payment. BOP is a statement of accounts showing all monetary transactions of a country. It is a statement of accounts showing all monetary transactions of a country with the rest of the world. Economic transaction can also be said. We can say economic transaction. So balance of trade, on the other hand, it is the difference between export and imports. So both are not same. Both are different. Here we have a statement, a list of papers which shows the status of the countries with the rest of the world in relation to foreign exchange. Here only export and import the difference either way. So, what is a monetary transaction? We should know the meaning of monetary transaction. Number one, visible trade, invisible trade, and international sale and purchase of financial assets, stocks, shares, bonds, and real assets like plant and machinery. So, first of all, visible trade. These are those trade which can be seen while crossing the border, especially goods. On the other hand, invisible trade, export and import of services. Here, export and import of goods, which can be seen while crossing the border. Over there, invisible trade, export and import of services, which cannot be seen while crossing the border. International sale and purchase of financial assets, for example, stocks and bond shares like that, and real assets like plant and machinery. So this is what about concept of BOP. We should not correlate with BOT. It is different balance of trade. Now component of BOP account. There are three components: current account, capital account, and official reserve account. These are the three components. So first of all, I would like to discuss first one, current account. Current account include export and import of goods, only goods, which can be seen while crossing the border. Number two, export and import of services, which cannot be seen while crossing the border. So services further divided into two parts, factor services and non-factor services. Factor services lead to factor payment. Be careful. Current account divided two parts, export and import of goods, export and import of services, and third one is current transfer. So factor services and non-factor services, number two is divided. It means it lead to factor payment, rent, interest, profit, like that. So factor payment further divided into two parts, investment income and COE, compensation of employees. Investment income, that includes rent, interest, profit, etc. COE, there are four component: wages and salaries in cash, payment in kind, pension on retirement, old age pension नहीं, pension on retirement, earned income ये एक किस्म की included in the national income, and social security contribution by the entrepreneur. So these are the component of COE. So current account, export import of goods, export imports of services. Third one, current transfer. So under services, there are two parts, factor services and non-factor services. Factor services further divided into factor payment, and factor payment again divided into investment income and COE. Investment income will come in the form of rent, interest, profit. COE, wages, salaries, payment in kind, social security contribution, and pension on retirement. On the other hand, non-factor services, which it means not earned from factor of production, that is land, labor, capital. So non-factor services include shipping, banking, tourism, insurance, software services, etc. So these are those which is not earned from factor of production, land, labor, capital, etc. So this is the part of current account. Now current and number two, current transfer. These are one-time transfer or unilateral transfer made by way of gifts, grants, foreign aid, taxes, and fines, old age pensions. So be careful, be remember, this may come in the form of a search and result question, case study, or any logical question in the examination. So this is the first part of current account. And the second part is components of capital account. There are components of capital account: borrowing, foreign investment, NRI deposits, banking capital, short-term credit. So these are I am going to discuss one by one. borrowing देश के अंदर और देश के बाहर, देश के अंदर पब्लिक से, आरबीआई से, फॉरेन और इंडियन फाइनेंशियल इंस्टीट्यूशन से, एक्सटर्नल फॉरेन इन द सेम वे फ्रॉम अब्रॉड. So external commercial borrowing available at market rate of interest in the international money market, and the rate is genuine as per the IMF or World Bank or the international parameters. External assistance means help available at concessional rates of interest raises liability. एक्सटर्नल हेल्प है जो अवेलेबल एट कंसेशनल रेट ऑफ इंटरेस्ट, हमें विदेशों से ये कंसेशनल रेट ऑफ इंटरेस्ट पे मिलती है, बिकॉज इट इज असिस्टेंस हेल्प इन केस ऑफ इमरजेंसी और एनी अदर काइंड ऑफ प्रॉब्लम द कंट्री इज फेसिंग. इट रेजेस लाइबिलिटी, नो डाउट वी हैव टू पे विद इंटरेस्ट विद लिटिल बिट लेस. Number two, foreign investment, which is a very important component for the slow economy, for the underdeveloped economy, for the developing economy. So investment is of two type: FII, foreign institutional investor, and FDI, foreign direct investment. So foreign institutional investment in the form of shares and bonds, foreign pension fund, etc. FDI includes MNC. Actual, in real, they are investing. MNC, multinational corporations, building new factories or acquiring existing companies. मीन्स एफ जो मल्टीनेशनल कंपनी है, या तो पुरानी कंपनी हमारी नहीं चल रही तो वो उसको एक्वायर कर सकते हैं, और नई अपनी इन्वेस्टमेंट करके वो नई मैन्युफैक्चरिंग यूनिट ओपन कर सकते हैं. So FII and FDI bringing a great inflow of foreign exchange, so which is an important component. If the environment, business environment, ease of doing business environment is proper, only then FII and FDI they are investing. At present, in India is one of the best destination for the foreigners. Most of the countries, the investor, they are investing over here, and this investment is increasing day by day. It will increase forex, foreign exchange reserve, which impact very good in the economy, GDP growth, employment opportunity, learning, exchange of knowledge, skill, training, and there are so many things that we are getting once they are coming. Then NRI deposit. These are only such deposit which considered. These are only such deposit considered which are done in the domestic economy. जो देश के अंदर विदेशी जो NRI नॉन रेजिडेंट इंडियन वो इन्वेस्ट करते हैं डोमेस्टिक इकोनॉमी में, वो ही कंसिडर किए जाते हैं। देन बैंकिंग कैपिटल, जो बाहर के बैंक है इधर आके अगर इन्वेस्ट करेंगे तो बहुत सारा फॉरेन एक्सचेंज लाएंगे। सो इट रेफर्स फॉरेन एसेट्स हेल्ड बाय कमर्शियल बैंक्स। It results in flow of foreign currency exchange. So commercial bank converting their foreign asset into liquidity. वो विदेशी फंड लाते हैं, विदेशी करेंसी लाते हैं और उसको इंडियन कैश में कन्वर्ट करते हैं टू मीट द डे टू डे बैंकिंग रिक्वायरमेंट्स ऑफ द पीपल ऑफ द कंट्री। सो बोरोइंग, foreign investment, NRI deposit, banking capital, and last one is short term credit. It arises on account of purchasing in the international market without making immediate payment. जो शॉर्ट टर्म क्रेडिट है, जो उधार पे लेना है बिना किसी पेमेंट करके, इट अराइजेस आउटफ्लो ऑफ फॉरेन एक्सचेंज। दी IMF, वर्ल्ड बैंक, उनसे आप ले सकते हैं, डिपेंड अपॉन द कंडीशंस, क्रेडिबिलिटी ऑफ द कंट्री। सो दीज आर द components of capital account: borrowing, foreign investment, NRI deposit, banking capital, short-term credit, and these are very important to understand it clearly. Read again and again, and again revise it. Borrowing, external, commercial borrowing, external assistance. Foreign investment based on FII and FDI, foreign institutional investor, foreign direct investment, NRI deposit considered which are only done in the domestic economy, banking capital, these are the foreign assets held by commercial banks. So it encourages inflow of foreign currency, foreign exchange. Short-term credit, it arises on account of purchases in the international market without making immediate payment. So now I am going to explain concept of official reserve account. So students, concept of official reserve account, third component of BOP account. The overall balance is reflected in official reserve account of the RBI. This is the question. The RBI is the custodian of foreign exchange reserves of the country. Each and every foreign transaction will be routed through RBI. For example, countries holding foreign currency, official reserve account के example, gold and other assets held by the central bank, and also special drawing rights created by IMF in which member countries can exchange for other currencies, which is very important. So this is official reserve account. RBI is the custodian of foreign exchange reserve. Each and every transaction will be routed through RBI. Examples: foreign currency, gold and other assets held by the central bank. Also special drawing rights created by IMF in which member countries can exchange for other currencies. And here some of the important observations related to official reserve account. Sometimes official reserve account is shown as a part of capital account BOP rather than a separate account. अगर ऐसा है, if it's so, then BOP always balances. Be careful. Number 2, increase in official reserve is indicated by a negative sign. Increase in official reserve is indicated by a negative sign, while decrease in official reserve is indicated by a positive sign. So always be careful while doing the question, replying the answer. So BOP always balances. when official reserve account is a part of capital account, or we can say current account balance plus capital account balance is zero. So this is what we are calling about the concept of official reserve account. So thank you very much to all of you.